Hello, in this video I will be sharing with you common trading mistakes beginners must avoid. It was in the news. One forex trader, he came and said that forex is scam and that most people that are making profit from forex, they were involved in fraud. This is untrue. There are many people that are trading forex, they learn it silently, they trade silently, they make profit silently, and they don't even make a noise. And that is the category that I want you and myself to be in, not to be flashy and flamboyant like some people do. So there are common trading mistakes that beginners must avoid in forex trading. Now, this individual said he sold 3 cars, he lost it to forex, then he took his family inheritance, and then in millions he put it in forex, he lost the money. This shows that this individual perhaps is greedy. How can you trade and you lose the first car, and within like 6 months to 1 year you just put in money? You didn't sit back and look at what is happening. If I lost 1 car, I sold 1 car and I lost the money to forex, why will I sell the second car and lose it to forex again, and sell the third car and lose it to forex again? This is because, number one, you have not learned the secret of forex trading, and then there are many common mistakes and you are making them. And then there are many other things, the greed and fear and many other things are involved. So that is why I'm bringing you this video to talk about the common trading mistakes beginners must avoid in forex trading. Entering the forex market can be exciting but challenging, especially for beginners. Many novice traders make avoidable mistakes that lead to significant losses and frustration. Recognizing these common pitfalls early can help new traders build a strong foundation for consistent profits and sustainable trading careers. Number one trading mistake is lack of a trading plan. One of the biggest mistakes beginners make is trading without a clear plan. A proper trading plan defines entry and exit criteria, risk tolerance, position sizing, and goals. Without it, traders often make impulsive decisions based on emotions or rumors, resulting in erratic trading and losses. Sticking to a disciplined trading plan helps maintain consistency and also objectivity. Another one is inadequate market research. Jumping into trades without thorough market analysis is another frequent error. Beginners sometimes rely solely on tips, hearsay, or gut feelings instead of studying fundamental drivers and technical indicators. Understanding market conditions, trends, and volatility through proper research increases the likelihood of making informed decisions aligned with the market context. Another one is poor risk management. Many beginners underestimate the importance of risk management and position sizing. Misusing leverage or risking too large a percentage of the account on single trades can quickly deplete capital. Setting sensible stop losses, orders, and limiting risk per trade, often 1 to 3% of the account, protects capital and helps traders stay in the game longer. You see, one of the formula that I use in trading, which I see have open trade as I'm making this video, is that let's assume that I have a capital of $1,000. I've placed a trade which is a -$5 or -$10. I place other trade which is in the direction of that -5 or -10, and then that -5 initially now becomes 5. I've placed another trade which is 0 point, which is a higher lot size or double the lot size. So by the time the initial trade comes to -5 or -10, but at that -5, -10 point, I knew the trade is still going to bounce back in my direction, my initial direction. So that when it is -10, I place another trade in the direction that I put initially. When the initial one comes to -5, the new one I put is now in -10. So I take the profit and I still leave the other one that is in -5 open. The other one at -5 may not run to 0 or 1, 2, 3 in profit. It will still go back to -10. I will still enter again in the direction that I've entered that made the -10 to be -10. It will run back again to -6. By the time it comes to -6, the new one I've entered is now in +8. I will take the profit again. So even though I have an open trade that is in loss, I'm making profit, I'm making profit. At a point, I may say, well, I have enough. This market have been ranging, going there and coming back, going there and coming back. I've had enough. In between, I've made much more profit, so I leave the trade, and this is what I do sometimes. So as I said earlier, most beginners underestimate the importance of risk management and position sizing. Misusing leverage or risking too large a percentage of the account on single trades can quickly deplete capital. Setting sensible stop loss orders and limiting risk per trade, often 1 to 3% of the account, protects capital and helps traders stay in the game longer. Another problem is overtrading and over-diversification. Overtrading is entering too many trades too frequently or increasing trade sizes impulsively, and this is a common cause of burnout and losses. Similarly, trying to trade too many currency pairs or asset classes without sufficient experience can scatter focus and increase risk exposure. Basically, at this point, my major currency I'm trading is Euro USD. So, though I have open trading GBP USD at the moment, I have open trading AUD USD. And even that Euro USD now, I'm out of it. The analysis I've done, I've seen that I don't have a clear cut direction at the moment, because the weekly pin bar which I've been trading is now showing it's now being weakened. It has sold as I predicted based on that weekly pin bar, but I'm not sure it will keep selling, and I'm not sure it will keep buying. So there's no clear cut direction. But for GBP USD, my analysis, I have some analysis, and the same thing for AUD USD, and these markets are playing out well. So at every given time, focus on one asset class or a pair of such asset classes pairs, and that is going to give you a good direction. And but most traders don't have such. They can trade all currency. They can trade gold, they can trade crypto, they can trade Bitcoin, they can trade Euro USD, GBP USD. They trade major pairs, they trade minor pairs. So successful traders concentrate on a few markets and trade selectively with high probability setups. Then another problem that most people have, mistake they make in trading, is emotional trading. Allowing emotions like fear, greed, or revenge to drive trading decisions often leads to poor outcomes. For example, fear may cause premature exits, while greed prompts chasing losses or holding positions too long. Emotional discipline is crucial to follow a trading plan and execute strategies consistently. Then another one is ignoring the risk-reward ratio. Beginners sometimes overlook the importance of evaluating whether potential rewards justify risks before entering trades. Poor risk-reward setups reduce profitability and increase the chance of accumulating losses over time. Then, adhering to favorable ratios, e.g. 1 to 2 or higher, increases the chance of long-term success. As a new trader, even as an experienced trader, why don't you focus on 1 to 2 or 1 to 3 risk-reward ratio? Why is your target 1 to 20 or 1 to 50? If you are doing that, you know you are greedy already, and you are likely to burn your account. So adhering to favorable ratios like 1 to 2 or 1 to 3 increases the chance of long-term success. Then another problem or mistake is lack of patience and realistic expectations. Forex trading is not a get-rich-quick scheme. I'll say that again. Forex trading is not a get-rich-quick scheme. The moment you know this, you know peace. The moment you know this, you know joy. The moment you know this, you know happiness. Forex trading is not a get-rich-quick scheme. Many beginners expect immediate profits and become impatient with losses or slow progress. This can lead to abandoning their strategies prematurely or chasing unrealistic targets. Developing patience and focusing on steady growth is essential for profitability. Then another problem or mistake is following the crowd blindly. Trading based on hype or following others without independent analysis usually results in entering losing trades. There was a time I went for a retraining with somebody which I paid for here in Ilorin, and then after the retraining, I was happy with what the person was teaching me. And then after the training, the person now said he has a signal group, and he was giving us signals free. Most of the time when I do my analysis, the signal he provides, my own analysis go in the opposite direction to his own. When you trade his own, majority of the time it ends in losses. When I trade my own signal based on the same currency, it ends in profit. And this is the person that taught me how to trade in the advanced level. So that is the reason why you should not trust anybody or should not follow anybody blindly. You also do your analysis. No matter the signal anybody have given you to buy or sell, you also do your analysis and see how the market is going. So each trader should develop their own style and understand the rationale behind trades rather than copying others blindly. So I've given you all this so that you can be able to use them and trade profitably. So by avoiding these common errors, beginners increase their chances of successful forex trading, and they reduce the risk of costly mistakes. Consistent research, disciplined planning, sound risk management, and emotional control form the foundation of profitable trading. This knowledge, combined with experience and continuous learning, empowers new traders to develop into confident and capable market participants. So I want you to subscribe to this channel if you have found value with this video, and like this video, share the link of this video with your family and friends, and keep coming back to this channel for more. If you have capital and you want me to trade for you on that account, I can trade and make 20% minimum every month on any trading account I'm given. So if you have such capital, you can send me a direct message so that we can discuss the modality. But take note that the profit we make will be shared between us every month, and then we can continue trading with the capital and making more profit every month. So if you're interested in this, send me a DM and I'll tell you how it's going to go. We can discuss on that together. Until I come away in the next one, this video popping up by the side from my channel is the next one you need to watch. Bye for now.